And if they can get them to do it very easy, they will. And they will suck up even more buying pressure, and then boom, they let the market springboard up. That's why you get false breakouts. That's why you get these games being played as the market starts to move. So you've got to be able to observe the market. Okay, if you look at the difference between these two bars on the 15-minute candle, and again, depending on your broker, you'll see that there's a pretty big difference. Over here, the market was definitely showing a lack of momentum, whereas on this side of things, the market was acting fairly sedate. It just wasn't able to move to the downside. So you can see here what I've done is added a line. This line represents a 35 pip stop. So you can see that you would have had all the way down to, let me get this other line on here. There we go. So you would have had all the way down to here for your full 35 pip stop. So even had you waded through this bar and said, okay, there's one down bar, let me make sure that things are really moving down. Two down closes. Listen, this has got to be a momentum trade. Either the market's going to bust through resistance or it's not. You know, we're not in the business of trying to figure it out. We want to get it on momentum trades. If we go back over here to the hourly bar, when the market's going to move, it moves very, very fast. You can see that example here. You can see that example back here. You can see it on the downside over here. In each case, and even right here, in each of these cases, the market moved very, very quickly. While it may not have been a big move, meaning a continuation move, it was more than enough to grab a very small chunk of profit, 25, 23 pips, and get out. And then move your stop to break even and keep that other position on so that you capitalize on the big move up. So, not a whole lot going on at this point. Nothing really forming up. You can see the hourly is just kind of mucking around. We've got the daily bars pushing up really right into prior resistance we've got the price pushing up into daily resistance from back in January. If we take a look at the Fibonacci level here from the high over in December, you can see that the 618 or 254 right here is going to be the next area that I'm looking for resistance. We don't have a whole lot of overlap in this case. If we go ahead to this high here, you can see we've got 254 up to 312 is about the best overlap that we have, but it still exists. So as the market moves into this level here, which is 254 to 312, we've got to watch this area for our what I call our harmonic resistance. That would be if you have a position left over, that would be the place to either target if you want to get out on a targeted level. Again, these exit strategies are on, I mentioned some of them on disc number 3, but most of them are on disc number 5 on the insider code. If you're picking a target level, this would be an optimal place to look to exit totally from the position. If you're using a moving average type of system, this would be where you would want to just keep your mind open for the market to reverse back to the downside so you don't get scared out of exiting too early. So nothing really setting up. With Friday being tomorrow, I'm not anticipating a whole lot of fireworks. We do have non-farm payroll tomorrow. That's another reason why I want to kind of lay low. That's always an active time. So around 8:30 a.m. Eastern, just watch out. Make sure you keep the non-farm payroll in mind. Hope everybody has had a profitable week. Have a great weekend, everybody. I look forward to talking to you soon.